Interactive brokers rise margin requirements. IBKR puts additional controls on use of leverage ahead of electronics. Interactive brokers clients were greeted with an email informing them of an increase in margin requirements leading up to the November elections in the United States. The latest stat that Intel margin requirements will rise up to 35% from normal levels starting September 28 through October 3rd. Maintenance margin requirements will increase in a similar manners between October 5th and October 30. The updates will be made each day following the markets close in New York, and will be effective the next trading day. By regulation, brokers usually loan their clients 50% off the value of a new position and 25% off maintain a current position. This will increase gradually to 36.5% for a new position and 33.75% for maintenance. The Intel margin is the percentage of the purchase price of a security that must be covered by cash and calibrate when using a margin account. The current Intel margin requirements set by the Federal Reserve Board regulation T is 50%, but this regulation is only a minimum requirements. Equity brokerage firms may set their Intel margin requirements higher than 50%. A margin account is essentially a line of credit in which interest is charged on the outstanding margin balance. Leverage provider of margin loans. Uh, Interactive Brokers is one of the largest provider of margin loans globally, charging extremely low interest according to the most recent filing with the SEC as of June 30, 2020. Approximately $25.7 billion of customer margin loans were outstanding. Interest rates of margin loans are currently 0.75% to 2.59% in the US. Investopedia named Interactive Brokers as its best broker of international trading, best for day trading, and best for low margin rates in 2020. In April 2020, IBKR took a loss of approximately $88 million due to the huge drop in the price of contract for New York. Maryland Exchange West attacks intermediate make crude oil to negative $37.36 $63 according to a report on Seeking Alpha. Several customers had a long position in this construct, and their losses exceed in the equity in their accounts. IBKR fulfilled the margin settlements with the affected clearing house on its customers' behalf. Interactive brokers interactive brokers said in the mail that may make additional changes to the margin on certain products or all oral products are depending on valuability. This includes changes built into the standard margin model as well as any new house margin requirements that may be imposed. Um, will there be more changes? Staff stands at interactive brokers as we are constantly evaluating the current market environment, and our margin requirements are reflections of that assignment. There was no press release issued on this topic as the frame does not doesn't announce operations policy. The margin agreement that customers sign with interactive brokers states that the firm may request additional margin called collateral from customers and may sell securities that have not been paid for or purchase securities um, sold but not delivered from customer is if necessary. The margin agreement that customers sign with interactive broker states that the firm may require additional margin coverage. Okay. Next, what other brokers are saying? It appears that interactive brokers is the only major firm updating its margin requirements that is pointed by, but they are also the only brokerage to take a major margin based close this year due to market volatility. Guarantee that volatility was in block road or market rather than in stock. But margin practice are extend to any asset class. The class that involves risks to the lender. Tom Thompson of Testy Works said, "We have not changed our requirements and we have no plans to do so." Rosalind Amselin from Sogo Trade says, "We will not be margin any changes at this time." Joe Harvin of E Options says his firm has not made any changes to its existing margin structure in the last month, adding at this time we have not made a decision to modify existing margin requirements. Typically, we make adjustment on a name to name basis depending on curriculums. Biotechs are one example of the high variability name that may requires increase in requirements from the time to time. Journey of Lightspeed Thales, Lightspeed Financial Service Group employs as a dynamic risks and methodology that quickly react to market volatility. We will continue to adhere to our policy to make adjustments as needed on an account level or sample basis, which should uh, predicate the need for a wholesale change to margin requirements across the board. Trade station has no immediate plans to alter margin policies as Jeff Peters or trade operations and risk teams will remain vigilant and if market conditions warrant take preparatory action to margin to manage and